If you are already financially fit and keep your finances organized and tracked monthly, then this video is probably not for you. For everyone else whose finances are a bit of a mess or a huge mess, this video will help you create order out of your current chaos. Maybe you only think about your money when it's tax time, and the rest of the year, everything is kind of run amok. So stuff is everywhere in hard copy in piles or drawers, or it's completely out of mind. And you've got more stuff living online, and it would take you more than a minute to hunt it down if you needed it. It's stressful and chaotic and makes you feel like you're bad at adulting. We're about to turn things around for you, so just hang in there. Real quick, I want to remind you what it means to be financially fit and how financial spring cleaning gets you closer to financial fitness. You'll know that you are financially fit when you can answer these 5 questions about last month. 1, do I know how much money came in? 2, do I know how much money went out? 3, do I know that more came in than went out? 4, where did all my money go? 5, am I satisfied with where my money went? In this video, we're not going to get to the point of answering these questions. We're just going to get to the point where you would set yourself up and be organized enough to answer these questions. In answering these questions, especially question 1 about the money that came in and question 4 about where all the money has gone, you'll get yourself tax time ready. And that way you'll spend the least time and money on filing your taxes. Fun stuff. So let's get this party started by gathering everything together. What do I mean by everything? I mean bank statements, credit card statements, bills, invoices, receipts, and whatever documents that are floating around without a real home. If you have years of stuff around, get it all together for now. If you have everything from last year, then let's just gather last year's items. Some stuff might be hanging out online, and if it has a $ on it and documents money going in or out, then print it out and add it to the pile. Some of you might experience resistance to this because you think printing things onto paper isn't very green of you, or even made to feel that going paperless is what modern people do. But please hear me loud and clear here. If you are not financially fit, meaning answering those 5 questions every month affirmatively, and you need to be, then we are being more wasteful with money and resources by being disorganized and therefore less green to a much higher degree when our finances are out of control. And the push to paperless might have its conveniences, like less physical clutter, but it comes at a tremendous cost, a disconnection between you and your money that causes overspending, stress, and oftentimes debt and late fees and other charges that would have been avoided had you been on top of your cash flow. So me personally, I get most bills and especially bank statements and credit card statements mailed to me the old-fashioned way, and I print out everything else. If you are financially fit and you answer each of the 5 questions every month quickly and easily, but you don't get everything in paper, that's fine. Keep doing you. You're doing great. But for the rest of us who don't quite have a hold on our finances, just trust me and go back to basics of having everything in hard copy. Your cool factor will only take a temporary hit, but when you get financially fit, you will be feeling yourself way more than ever before. So gather everything together on a large surface, desk, table, or even the floor. And now you're done with step 1. Next up is organizing by years. Go through the pile and create smaller piles of documents by year. It can be helpful to write the years on a sticky note and spread those around the space so you can easily keep track of which pile belongs to which year. Easy enough, right? Now that everything is in piles by year, we're going to break down each year into even smaller piles by months. So maybe grab those sticky notes again, write out each month on a sticky note and place them in front of you. Now grab the pile of the most recent year and begin to break it into the sub-piles by month. A question comes up here about which month a document belongs in. Does it belong in the month that the bill or invoice or statement is dated, as in when it was created, Or do you assign it to the month in which it was due or when it was paid? Hopefully you paid the bill the same month it was due, but if not, you're left with 3 options. So right about now, I'm going to use a couple of accounting terms, but don't worry, this is the last of the jargon and I'm going to explain it slowly. There are 2 main methods used by accounting professionals to keep track of your money. The first and most popular method is the cash basis. It's a little confusing because you'd think that this was the method for tracking income and expenses paid in cash, but no, that's not it. It refers to accounting for income received or expenses paid when the money actually is deposited or paid out. Imagine that we still lived in the cash-only days. Money would count as collected or paid out in the month that the cash was received and the month that you handed over the cash to pay a bill. In today's world, that's when the check was deposited or the money left your checking account to pay a bill. So if you issued an invoice for work that you did in January, but you didn't receive and deposit the check until February, then the income counts towards February, which is when you actually received the money. Same goes for a credit card statement that was billed to you in January, but is due and hopefully paid in February. Since the money actually moves out of your account in February, all of the expenses listed on that statement are considered February expenses. This is even the case if the items you purchased on that statement were taken home in January or even December. It's not about the month that you took something home or the month that you were billed. It's about the month that the money actually left your checking account to pay for that item. So if you're using the cash basis of accounting, the income and expenses count towards the month that money was actually received or paid out. Now, the other method used much less frequently, but is still used, is called the accrual method, and it's basically the opposite, where income is counted towards the month that it is billed for, rather than when it's received. And an expense counts toward the month it was incurred, rather than the month that you paid for it. So if you issued an invoice for work for a bill issued in January but due in February, that would also count as a January expense, even if you didn't pay it until February or March. Again, the first method, the cash basis, is most popular. But if you've got an accountant you work with, you can double check by asking them which method they use with your accounting. If you don't, just assume the cash basis. So that means that you're looking at the bills and putting them in the month that they were paid for. But if that's too hard because you don't know or don't remember when you paid it, then go ahead and put it in the pile for the month listed on the bill. The thing is, just stay consistent and not to go back and forth between the 2 methods. As you finish breaking down each year into months, place each month into its own folder. Label each folder with the month. Then gather all 12 folders for that year and band them together. You can use a rubber band, a binder, or Spandoflex, just something that keeps all 12 months together. Label the front with the year. By this point, you'll be able to figure out your income for each month and total expenses for each month. If you want to take it a step further, and you kind of need to if you're self-employed, you'll break down each month into categories so that you'll know where your money went each month. As in, how much went towards supplies, how much went towards marketing, and how much went to each of the other categories that are tax deduction. So once you've broken down your giant pile of stuff into years, and then those years into months, you're on track. Now you can take each of those months and categorize them by category. Please be sure to look for the video where I break down all of the categories for personal spending. And you can also look at your tax return for the list of expenses for your business. This will have you set up to be organized, to be able to answer those 5 financially fit questions. Hope this helps. I'll see you in the next one.